Hi, today is Sunday, February 12th, 2023. I am Jason Shapiro with crowdedmarketreport.com. Today I thought I would go into the concept of having a portfolio of trades rather than just one trade at a time, trading whatever S&P, long, short, and all your P&L kind of depends on whether you get that particular trade correct, which is very difficult to do over time. So there's a concept, I think it was Bruce Kovner who said in the first Market Wizards, every time he has a long trade on, he'd like to have a short trade on against it. And I don't think that that's good all the time necessarily, but over time, that's what I like to try and do. And what happens is it ends up sort of smoothing out your P&L curve, which has a lot of advantages, some of them being like psychological, rather than dealing with the volatility of every day. Did I guess right today? Did I not guess right today? And all that, which gets into your mind, makes it a lot harder to relax, makes it a lot harder to sleep, and that all makes it a lot harder to trade because your focus gets lost and all the different psychological demons come in, which messes up your trading. Whereas if you have a much smoother curve, you can sleep a lot better, you can keep a lot clearer mind, and that can keep you trading a lot better as well. So there's a few ways to go about this and a few ways to look at it. The first one I would talk about is sort of having a long short within the same sector. So let's take a look at stocks, for example. Maybe you're long NASDAQ and therefore maybe you can get short Dow against it. And choosing how and when to do this obviously comes down to your personal methodology, whether it be a technical methodology, whether it be a more fundamental methodology. I personally, as I've said a million times, like to look at positioning for that type of thing. So if we go into the positioning stuff, for example, coming into this year, and in particular starting here, which was the second week of January, we started to see speculators in NASDAQ get very short. And this is the commercials, who were very long. So I'm getting long NASDAQ there. So if I want to take a short position within the sector, I now want to look at the positioning, the one that has the least amount of speculator shorts, which in this particular case, here's the S&P, here's the Russell, and here's the Dow. So the Dow is really where people were least short. So if I were to do this trade, which by the way I didn't, and I'll get into that, but I'd be long NASDAQ, short Dow based on the positioning. And if we look, obviously, since the beginning of the year, which is here, the Dow really hasn't done very much at all. In fact, since that stuff, which was the second week in January, the Dow has gone nowhere, right? Whereas the NASDAQ, on the other hand, since the second week of January, has been sort of a rocket ship. So that long NASDAQ, short Dow was a nice trade. Now, I mentioned I don't do that. I will do it if individually I had a buy in NASDAQ and a sell in the Dow based on positioning. Then I will have those both on, and that will make me very happy, and I can sleep very easily. But what I look to do, and this starts to get a little bit more into the whole story of what's going on in the market, is if I'm long a risk asset like the NASDAQ, I look across assets to see where I can get short based on positioning. And listen, there are times where it's showing me that nothing is a short in positioning, and I'm long. Okay, well, amazingly, when there are no risk shorts and only risk longs, and I don't have any shorts, that tends to be when risk assets just go up. So I can ride that trade by itself at that time. But I like to have a short. So I'm kind of looking for where it is, right? So let's take sort of what has been going on in the markets recently. It's this whole bet on interest rates. And, if interest rates are going to go higher with the Fed, then risk assets are going to come down. And so where can I make a bet where I'm going to catch that, right? Well, I could get short bonds. Well, I haven't gotten any sign of crowdedness in bonds, so I can't get short bonds. Well, I can get short some other risk assets. So one where I have seen that was this, right? The energies, okay? You see heating oil, speculators started getting very long a few weeks ago, and gasoline, speculators started getting very long a few weeks ago. So here you go, I'm riding NASDAQ. Well, here's an asset that I can start to look to get short. And like I always say, I don't do any trade without having some sort of market confirmation to do it. And in this particular case, we had this nice reversal day here, which was on bullish news. You see that the market went up on the day, sort of touched new highs for this move and then failed. And that was all on bullish news. So I get short there. So now I'm feeling good because now I'm short the RBOB and I'm long the NASDAQ. And here was another one, which was gold. Okay. Here we had this nice reversal day on gold, which was on what would theoretically have been bullish news for gold. Bonds were going down, the dollar was going down, and gold should have been bullish, and it reversed and closed down. So now I'm getting short gold. So now I have a nice portfolio. I'm long stocks, NASDAQ, which is quite volatile, and I'm short the gold, and I'm short the RBOB. So I have this long short portfolio mix. And then I'm watching, obviously, the correlations and listening to sort of the whole macro scene for what people are thinking about so that I can continue to monitor that and see how it goes. So, and again, this is never going to work every day. Nothing works every day, but this has worked over time. The NASDAQ obviously topped on February 2nd, okay? So my NASDAQ trade started losing money on February 2nd, right? But in the meantime, the RBOB thing has done well. Now, again, on Friday, this last Friday, NASDAQ went down, RBOB went up. Okay, I got double whacked on that one, but fortunately gold went down, so it helped some. I lost less money than had I been just long NASDAQ, right? And over the period of the whole thing, again, my risk to drawdown has been much better than had I just been long NASDAQ. So that's sort of the concept of portfolio. I think you'll find it helps a lot to have those type of trades on. In particular, over time, your equity curve is going to be much smoother, which, like I say, is going to lead to much better trading because you're going to be psychologically much better prepared to deal with everything. It's not going to have, hey, you might have caught some huge long on the S&P and you weren't short anything, and had you been short, you only would have made half of what you would have made that day, and you'll be pissed. But the idea is to look at it over time, not just one particular day. All right. So anyway, that's sort of my thoughts on the whole portfolio idea. Always happy to hear questions and comments, and always hoping that people will join us at Crowded Market Report or YouTube or Twitter and all of that. So look forward to seeing you there, and I hope everybody has a good week. Thanks.